going on, everybody? I'm Eric. Welcome to the channel. Today I am going to show you why I think index funds are one of the best ways to build wealth. I've been investing for over 20 years and I've built a 7-figure portfolio. Index funds are a big reason why. So let's take a look at the stats first, and then I'm going to show you some real-world examples from Reddit users to prove my point. A small minority of active fund managers, often fewer than 20%, consistently beat their benchmark indexes over the long term, with success rates varying significantly by market and time horizon. Data from sources like Morningstar and S&P indices show that over a 10-year period, as few as 8 to 14% of large-cap U.S. equity funds have outperformed the S&P 500. The longer the time period, the lower the success rate, with consistent outperforming being rare and often attributed to luck rather than skill. So one of the first jobs I had was at a Fortune 500 financial company that had mutual funds and other investments, right? And I got a little glimpse into what that looks like. And these people that are managing these portfolios are Ivy League educated. You could look around the room and see Princeton and Yale and Harvard and all of these wild credentials. And these fund managers had billions of dollars on their shoulders for their clients, their customers, right? So once you understand that these are the backgrounds of these people, why would you think that you somehow have the ability to beat the market when people like that can't beat the market? So you have to ask yourself, especially if you've been trying to day trade or you're trying to do options and things like that, how much misery have you already gone through? There's a good chance that you've been shoveling your money into the fire. And if that's you, the faster that you accept that this is reality, the better off you'll be. So the few examples that we have today are from the financial independence subreddit. So I know these are some big numbers. Ignore the numbers. That is not the lesson here. The lesson is what these people are invested in, not how much they have. So if you're looking at this and you're saying $500,000 is absolutely crazy, I'm never going to have that kind of money, please stay with me. So think about this. If the people with the kind of serious money that we see on here are invested in these index funds, think about that. They have more resources than you. They probably have access to people that are smarter than us. Just overall, they have a much better opportunity to invest their money wisely, yet they're invested in index funds. Let's take a look. This person's 32 years old, just crossed the 500K milestone, divided up against VOO, VB, VXUS. So let's take a look. VOO, Vanguard 500 Index Fund, ETF. Net expense ratio, almost nothing. Then he was invested in VB, small cap index fund, tiny expense ratio. VXUS, total international stock index fund, tiny expense ratio. So let's take a look at the next guy. When can I retire? Roughly $1.5 million in investments. My money is almost entirely in VF, IAX, and VTSAX. Let's take a look at these. Vanguard 500 Index Fund, Admiral Shares. So this is an S&P 500 Index Fund. Tiny expense ratio. And look at the type of things that this fund is invested in. So an S&P 500 Index Fund is just going to be America's 500 biggest companies. So these are quality investments. Look at these. You know all of them, right? Next one, total stock market index fund. Like another low expense ratio and quality holdings. One more on Reddit. The biggest one yet, 37 years old, 4.3 million net worth. What a place to be. $2 million invested in VXUS, which we just saw, and 60% in US. Total market equities, mostly VOO. So we've already seen both of these, but here they are again. Total market stock index fund and Vanguard 500 Index Fund. Noticing a trend here? So these are real-world people who have real-world money, and they are choosing to invest in index funds. So again, let that sink in. The faster that you realize that you probably can't be a day trader, you probably shouldn't be buying and selling options, you should be trying to win a slow and steady race. So look, guys, again, the issue here isn't how much money you're making. It's that you're participating and that you're buying quality things. So what's worked for me is buying these index funds. Every time I've gotten paid over the years, I have bought mutual funds over and over and over again. It's not a super exciting strategy, but I think once you try it, you'll start to see some small gains and you'll realize that over time, this is going to make you some money. I tried this myself when I was younger. I tried to day trade stocks and try to find out whatever the next big 10x is. And the fact is, guys, is you might hit one every now and again, but to be consistent at it, it's just not possible. So if you accept a market return, and you shouldn't even feel like you're accepting a sacrifice when you take a market return, because again, statistics show that it's going to be the better of the two options over the long term. So that's the takeaway today, guys. The faster you convince yourself that index funds are the way to be, I think the faster you're going to be on a path to building serious wealth. So hopefully this helped you. Please like and subscribe. I'm a new channel and I'd love to help you out. So hope to see you again. Thanks for sharing your time with me.